Hi everybody, this is TJ with netpicks.com, and with the new release of our exciting Spotlight SubZero trade, I thought it would be a good idea to show you some examples and talk to you a little bit about how we use SubZero and the Spotlight Power Trader in general. So I thought it would be good to look at today's crude oil inventory report because it is just a real succinct way of explaining how you can use both approaches. Okay, the Spotlight Power Trader is typically something that we're going to use with a formalized trade plan, one that we can quit with a positive result most of the time and then control our drawdowns with minimal and efficient trading on those random few sessions that we cannot quit positive. And a good example of that is the Crude Oil Inventory Report, because it's a really clear, defined trade plan. The report comes out at 10:30 every Wednesday, and then we wait 2 minutes, and then we start looking for a trade. You've seen me do this with the Counterpunch Trader, which I put on YouTube quite often, but it works fantastic with Spotlight as well. It's a completely different approach, but Spotlight's very effective. We could look at some ways that you can use Spotlight, but the typical way is with the 5-tick momentum bar. And today is Thursday. It was a shortened holiday week, so the inventory report was today at 11. Usually it's 10:30 on Wednesday, like I said. Now this trade plan is very clear. You have a clear start time. You start looking at trades 2 minutes after the report. You're trying to get to a target 2 winner for power of quitting. Then you stop. You're done. That's the end of the trade plan. Okay, and you probably just want to try on a few trades. Usually I'm looking at anywhere from 3 to 5 trades, but the goals are getting hit usually on the first or second trade. So for example, today 11:30 comes, or 11 o'clock, and we're just waiting. We're not trying to trade into the news event. You see all these bars. Finally, there's a setup here, but it's already down here, and then it comes down and hits its money management level. So we're not going to chase this trade. That happened just before our start time. So now we're waiting for the next setup. That happens here. It's still just 2 minutes past. Let me move this down so you could see this. You see? So the first setup is to get long at 67.76 and take profit if we can get to target 2 at 96. And it triggers in and it pushes higher and higher, and then it hits its money management level. And then the stop moves up to lock in profit and take the risk off the trade. And then it almost gets to target 2. And it stops out right here at 82. Okay, so that was good for 6 cents, basically, $60 a contract. And so we don't have a target 2 winner. We haven't hit our goals yet. So we want to take another trade. And so the next trade comes. Yeah, unfortunately, our trailing stop took us out of the trade. That could happen sometimes. Some traders might have left this stop below this bar here, this little swing level there, and would have stayed in the trade, okay? But just following the dots on the chart, the next trade is a short, and it gets short, and it's finding support at that 50 moving average, and it ultimately stops and reverses right here. So this is now the third trade, okay? But here's the thing. The short trade got short at 89, and it's getting long at 96. So it loses 7 ticks. So you're 6 ticks ahead, you're 7 ticks down. You're down by 1 tick on those 2 trades. The next trade comes, hits money management, and pushes up through target 2. And target 2 is good for 14 ticks. So in 3 trades, you have your positive result. And then it stops out again. It was a very volatile market. Today it took 3 trades, but 3 trades is a positive result, and power of quitting, you're done for the session. That's a typical walkthrough of a formalized trade plan with a well-defined start time, a well-defined stop time. In this case, it's X number of trades, and goals that are dynamic to market conditions, hitting that target 2. It might have been a trade that was larger, and on some occasion it will be, but the point is that the strategy achieved its goal of being able to move your account forward on most sessions. This session qualifies for that. Okay, and that's it. We don't force it. We don't need to keep trading. That's the way to use Spotlight. Whether you're trading the Dow E-mini each day, or a Forex pair, or the Russell, or gold, or whatever, you want to prove your plan can quit positive most of the time, and then you set out to do that. And then you be patient. And over time, as your account grows, you increase your position size, and your equity is going to go up and up and up. That's the point. That's why we trade. Now, so why SubZero? What if you want to trade more? What if you're like, okay, that was really good. I'd like to juice up what I'm doing. Are there other trades I can take that are beyond a formal trade plan, but are still high percentage enough that I could win a majority of the time if I take these trades? And the answer is yes, there is. And it's our new setup called SubZero. And that's where we use SubZero. We don't mix it up with this chart. It's completely separate. So let's say that, all right, cool, we made 13 ticks minus some slippage, maybe only ended up with 11 or 10 ticks per contract, and you really feel like you want to trade some more, especially when the market's really active. Like today, crude oil is just so active. Yesterday was dead. Today, active. So look at what SubZero can do. Let me show you. Here's a chart of the crude oil report. Remember, we were trading in here after the 2 minutes. You can see there aren't any trades because we're waiting for our green line, our average strength indicator, to get below minus 20. That's where the SubZero name comes in. And the idea is that when the average strength gets below minus 20, it's prepping you to get in front of the next move that's going to occur. Okay, and you can learn with training what that means, but it's either a 1 or 2 trade sequence, and that's it. And so the trade itself becomes the trade plan. And it can happen at random times, but you have the heads up because the green line, you could see when it's getting below the minus 20. So if you're watching it, you're watching it, you're watching it. You could look at a number of charts. I look at like 6 or 7 charts with SubZero. So finally it gets to minus 20 here, and I've already marked up these trades, but you could see it gets short. So this one happened 46 minutes after the crude oil inventory report, but these are very high percentage trades. Look at how it got in and hit all its targets. 15 cents, 22 cents, 28 cents. I mean, that may be all you need. You get that crude oil report, you get one good SubZero trade. Now, a trade could lose. You're always risking when you get into the market. But if you're going to take a random trade, then use a technique that gives you a random trade of opportunity where the odds are still stacked in your favor. And that's what SubZero is designed to do. There's another one here, and look at that one. And look at misses target 3 by just 1 tick, but target 2 made 19 cents for $190 and stopped out with the trailer. We still trail the same technique. The next trade's a long trade. These are all SubZero. Notice it went up and came back down below minus 20 again. Something about that number that sets up really nice trades. That one just barely missed target 2. And then came down and stopped out at money management here. So you could see, you know, it's considered successful if it gets to break even, which is that itty bitty little dot right there to the left, right there below that target 1. Okay, that's considered a successful trade. We get to break even. Anything beyond that is all gravy. So we're hoping to get to our target 2 or beyond. Here's the current trade that's still going, and it almost got to target 2, but it did trail up a little bit. Market's starting to slow down a little. 1, 2, 3, 4 winning SubZero trades after the report. Another market that trades great after the crude oil report is unleaded gas futures. You can see a beautiful trade leading up to the report. This one was a little early at 10:45, but after the report comes out, waiting 2 minutes, there's a short trade here, and it's only able to get to money management, and then it stops out at near break even, and then misses the move down. Remember, Spotlight's not trying to catch every move. Spotlight is only looking at the high percentage moves, and then we apply that to trade plans that we test so that we can grow our equity on a steady basis. This was unfortunate. Now, there are ways to trade this. I often teach in the trade room how you can use certain select moving averages, and then when you see the dots lining up next to them, you can calculate some trades. There's going to be an exciting new indicator set that's going to do that for us, which is currently in development. But what you could also do is turn to your handy dandy SubZero chart. So here's SubZero, and there was some nice random SubZero trades earlier in the session. Look at that perfect target 3 on that one. Remember, $4.20 a tick. Unleaded gas is a nice market to trade. This one got to break even. You just saw the trade I showed you on Spotlight, which caught this short trade coming down that stopped out at money management. Now SubZero needs for the line to get back below the -20, and it does right here. And then there's a nice setup, and that setup quickly moves to money management, and all of a sudden it's a risk-free trade, and it just keeps going and going and going. These are the kind of trades you want to be in, and when the market's really active, SubZero will get you in front of the moves, the explosive moves before it happens, as the line goes up and up and up and up and up, indicating the strength in the trend, in this case a downtrend. But because it got you in prior, that's what the whole SubZero is. This average strength indicator is actually a lagging indicator, but we don't use it in the way you would think. We use it as a leading indicator. The way we use it, it leads. So by getting down below that -20, it is letting us know that a powerful move is imminent. And then we use our other techniques, our exhaustion dots, our balance line, our price action to get us into the trade. So Spotlight Power Trader, excellent setups, high percentage. Use them with trade plans that you can prove to yourself. Structure. Run it like a business with a start time and end time and daily goals. And the goals should be dynamic. Power of quitting goals. It kind of dance and flow with the market. Some days you'll make more, some days you'll make less. You should be able to quit most of the time with a positive result and then control your drawdown by limiting your trading and limiting your risk exposure to the market. That trade plan should be self-contained. Run it like a business and it will serve you well. As you grow your equity, you will then use the power of compounding and increase your position size with a very safe ratio of your capital versus the amount you risk. And this is all taught in training. For the additional juice and extra trade opportunities, you can learn how to use SubZero. You don't want to be so cavalier that you just start shooting from the hip. You want to still respect the risks of the market. But when you use SubZero correctly, you could really juice up your profit potential. And when you combine that with the high percentage winning trade plans of Spotlight Power Trader, you've got a great combo, a 1-2 punch, so to speak, with a very powerful, effective strategy. Hope you enjoyed this video, everybody. This is TJ with NetPicks and the Spotlight Power Trader and the new SubZero. See you on the next one.